At Intel's headquarters in Silicon Valley, an almost unthinkable meeting is taking place. The US government, two of the tech industry's fiercest competitors, and a Japanese investment giant are all lining up multi-billion-dollar bets on Intel, a company many had written off just a couple of years ago. In a series of stunning announcements, Washington is committing over $10 billion and even taking an ownership stake in Intel. NVIDIA, the world's AI powerhouse, has agreed to buy $5 billion worth of Intel stock. SoftBank, known for its high-stakes tech gambles, is injecting another $2 billion. And Apple, the same Apple that famously ditched Intel's chips in its Macs, is now in talks to partner and potentially invest alongside them. It's the most unlikely alliance in modern tech history. Why are Intel's one-time rivals and skeptical customers now becoming its biggest investors? What do they see on the horizon, and what does each of them stand to gain from resurrecting the American chip giant? This is the definitive explainer of this new, grand coalition. Each player has a different, self-interested motive for joining forces to save Intel, and all of them agree on one thing: a world where only TSMC, Taiwan Semiconductor Manufacturing Company, can build the most advanced chips is simply too risky. To understand why, let's break down the coalition piece by piece. Everyone gets a slice. Just a few years ago, Intel looked like a fallen giant. The company that put the silicon in Silicon Valley had lost its manufacturing edge, ceded market share to rivals like AMD, and even watched longtime partner Apple abandon Intel's CPUs for homegrown chips. Meanwhile, TSMC, a single company in Taiwan, rose to dominate cutting-edge semiconductor fabrication. To put that in perspective, 90% of the world's most advanced high-performance chips are produced in Taiwan. Yes, almost all the brains of our iPhones, high-end PCs, and AI supercomputers come from an island sitting 100 miles off the coast of mainland China. US Treasury Secretary Scott Bessent recently called this the world's biggest single point of failure, warning that such dependence is a serious threat to the global economy. If a natural disaster or geopolitical conflict halted Taiwan's fabs, the technological world could grind to a halt. For the United States, which invented the semiconductor, this reality was a wake-up call. In 1990, the US produced 37% of the world's chips. By 2020, that share fell to just 12%. America's chip manufacturing capacity eroded as companies outsourced production to Asia for lower costs and generous foreign subsidies. Now, cutting-edge logic chips, like processors for smartphones, data centers, and advanced GPUs, are made almost exclusively overseas, with TSMC and Samsung in Asia leading the pack. Intel's struggle mirrored America's broader decline in semiconductor manufacturing, and created a consensus in Washington and industry that something drastic had to be done. Enter the CHIPS and Science Act in 2022, a $52 billion federal program to turbocharge domestic semiconductor production. Intel, under then CEO Pat Gelsinger, launched an ambitious turnaround plan dubbed IDM 2.0, vowing to rapidly catch up to TSMC's technology and even become a foundry for other companies' chip designs. New megafabs were announced in Ohio and Arizona. Intel promised 5 process node advances in 4 years, moving from Intel 7 to Intel 18A by 2025, to regain process leadership. It sounded bold, some said unrealistic, given Intel's years of delays. But the stakes could not be higher. America's tech leadership and supply chain security were on the line. Fast forward to today, late 2025. Intel's turnaround is at a make-or-break juncture. The US government, major chip customers, and investors have decided to act together in a last-ditch effort to tip the scales. This coalition is pouring in resources, money, and commitments to ensure Intel's success. Each member of this alliance has its own reason for doing so. The US government, the patriot, geopolitical and national security motivations, NVIDIA and Apple, the hostages, supply chain survival and bargaining power, SoftBank, the gambler, a high-risk financial bet on a comeback story. In the first slice of this alliance, we have Uncle Sam. The US government's motive for backing Intel is straightforward: national security and tech sovereignty. Washington sees an advanced Intel as a strategic asset, essential to reduce America's dangerous dependence on foreign chip makers, especially TSMC in Taiwan. As one official put it, relying on Taiwan for 99% of high-end chips is untenable. That's why the government is not just offering tax breaks, but actually becoming a stakeholder in Intel, an unprecedented move in modern U.S. industrial policy. Through CHIPS Act funding, the U.S. Department of Commerce has awarded Intel $7.86 billion in direct funding for new fabs and advanced packaging facilities. On top of that, Intel is eligible for a 25% investment tax credit for its U.S. plant expenditures, potentially worth tens of billions more. And that's not all. Intel also secured a $3 billion contract for developing secure chips for the U.S. military, the Secure Enclave program. In total, Intel plans to invest over $100 billion in U.S. manufacturing, turbocharged by these government incentives. The most eye-opening part of this partnership? The U.S. government is taking an equity stake of roughly 10% in Intel. As of August 2025, under an unconventional deal brokered by the new White House administration, Intel issued the government around 274 million shares and set aside options for even more. This effectively makes Uncle Sam one of Intel's largest shareholders. It's a historic arrangement. Essentially, America is part owner of its flagship chip company, reflecting just how vital Intel's revival is deemed for national interests. Commerce Secretary Gina Raimondo said the CHIPS program is meant to supercharge American technology and make our country more secure, and Intel is expected to play an important role in the revitalization of the U.S. semiconductor industry. In other words, Intel's fabs are now treated as strategic infrastructure, much like ports or energy grids. Why such urgency? The U.S. wants leading-edge chips on American soil to ensure supply in any crisis. Think of fighter jets, satellites, 5G networks. They all need advanced semiconductors. It's hard to overstate the government's concern. If China were to threaten Taiwan or cut off chip exports, U.S. industries and the military could be crippled. By massively subsidizing Intel's new fabs in Ohio, Arizona, New Mexico, and Oregon, Washington aims to create a secure dual source for cutting-edge chips at home. Intel's upcoming processes, like Intel 18A, roughly equivalent to TSMC's 2-nanometer class, are expected to be world-class. With Intel 3 already in high-volume production and Intel 18A set to follow next year, leading-edge semiconductors are once again being made on American soil, Intel CEO Pat Gelsinger noted. It's exactly what U.S. strategists want: the most advanced chips designed and built in the USA, no longer a solely Asian dependency. From the government's perspective, pouring money into Intel is not about charity or even profit. It's about building a resilient supply chain and protecting the economy. Over the past decades, the U.S. learned the hard way that surrendering manufacturing can undermine innovation. By 2020, America not only lost chip production capacity, but also the learn-by-doing expertise that comes from running leading fabs. Now, initiatives like the CHIPS Act and this Intel stake are meant to reverse that trend. It's industrial policy on a scale not seen since the Cold War, when the U.S. subsidized semiconductor consortia to beat Japan's challenge. In short, Washington is the patriot in this alliance, motivated by geopolitics and security. It is effectively saying, we cannot allow the West's semiconductor future to hinge on one company in one faraway location. By backing Intel with cash and even ownership, the U.S. gets a measure of control and assurance that advanced chip-making capability will stay in American hands. And in return, Intel gets a huge financial lifeline for its $100 billion factory expansion plans, plus the endorsement that comes with Uncle Sam's confidence. As Intel put it, this partnership demonstrates the U.S. government's confidence in Intel's essential role in building a resilient, trusted semiconductor supply chain on domestic soil. National security is priceless, and the government is betting that a revitalized Intel is key to securing it. The next slices of our unlikely alliance pie are Nvidia and Apple. These two don't always get along. They've competed fiercely in areas like graphics technology and have very different business models. But we're grouping them because they share a critical trait. Both are essentially hostages to TSMC's manufacturing. Nvidia and Apple are mega customers of TSMC, entirely dependent on that single company to produce the chips at the heart of their flagship products. That dependence has served them well so far. TSMC's fabs are world-class, but it's also a glaring single point of failure. If TSMC ever falters, or if its capacity is cut off, Apple's iPhones and Macs and Nvidia's GPUs would instantly be in jeopardy. For these companies, investing in Intel is a form of self-preservation, a hugely expensive insurance policy to create a second source for advanced chips and to gain negotiating leverage over TSMC. Let's unpack the situation. Apple's predicament. Apple Inc., the world's largest tech company, relies on custom-designed chips, the A-series in iPhones and M-series in Macs, to deliver its competitive edge. But Apple doesn't manufacture these chips itself. TSMC does, almost exclusively. In fact, Apple has been TSMC's single largest customer, accounting for roughly 25% of TSMC's revenue. Every new iPhone system on chip, every new Mac's processor, is etched in silicon only in TSMC's facilities, mostly in Taiwan. Apple's most sophisticated chips are all produced by TSMC. This tight partnership has given Apple industry-leading chips, but it also ties Apple's fate to TSMC's. If something were to disrupt TSMC's output, a geopolitical crisis, a natural disaster, even a sudden capacity crunch, Apple's supply of chips could dry up for months, or longer. The risk is existential. Imagine if next year's iPhones had no chips to go into them. Apple's CEO, Tim Cook, normally not one to comment on competitors, has publicly said, "We'd love to see Intel come back," explicitly welcoming more competition in advanced chip manufacturing. Why? Because Apple desperately wants an alternative to TSMC, even if that alternative is the same Intel whose chips Apple stopped using in Macs in 2020. Apple's motive is clear: supply chain security. They need a backup fab, or at least the credible threat of one, to ensure they're not 100% hostage to TSMC, and by extension, to the geopolitical uncertainty surrounding Taiwan. Nvidia's predicament. Nvidia, on the other hand, is the leader in GPUs and a driving force of the AI boom. Its latest graphics processors and AI accelerator chips, like the coveted H100 for AI servers, are marvels of 5nm and 4nm technology, and they, too, are manufactured by TSMC. In 2023, Nvidia accounted for around 10% of TSMC's revenue, and this share has been rising sharply. Analysts forecast Nvidia could equal or even overtake Apple as TSMC's top customer, possibly reaching approximately 20% of TSMC's revenue by 2025. In other words, between Apple and Nvidia, almost half of TSMC's business comes from just these two companies' cutting-edge chip orders. That concentration is risky both ways. Nvidia knows that if TSMC hits a snag, Nvidia's ability to ship products collapses. We got a small preview in 2020 to 2021 when a global chip shortage meant Nvidia couldn't get enough supply. Gamers and data centers alike saw shortages of Nvidia cards. Nvidia even tried diversifying by having Samsung manufacture some of its chips. The GeForce 30 series used Samsung's 8nm process. But the best performance came when they returned to TSMC's latest node for the GeForce 40 series. The bottom line: for its most advanced, power-efficient chips, Nvidia currently depends entirely on TSMC's Taiwan fabs. TSMC currently manufactures NVIDIA's flagship processors, as Reuters dryly noted, the unstated implication being that if those fabs went offline, NVIDIA has no plan B right now. So, why are NVIDIA and Apple suddenly cozying up to Intel? Because they need Intel to become that plan B. They need a second source for leading-edge chips, a credible alternative foundry where they could one day manufacture their future A20 chips for Apple, or their next-gen GPU and AI chips for NVIDIA, if needed. By investing in Intel and collaborating on technology, they hope to accelerate Intel's foundry development to the point where it can actually handle their cutting-edge designs. Even if Apple and NVIDIA continue to use TSMC for the majority of production, as they likely will in the near term, simply having Intel's fabs as an option strengthens their bargaining position. TSMC, for all its dominance, will think twice before raising prices or prioritizing other clients over Apple/NVIDIA if it knows those giants have backed Intel's foundry as an alternate. It's leverage. It's like having a spare supplier in your back pocket for when the main supplier can't deliver or wants to charge double. There's also a strong whiff of no choice here. In an ideal world, Apple and NVIDIA might prefer not to bankroll a competitor's resurgence. Apple, for one, famously moved away from Intel's chips in Macs, and NVIDIA has clashed with Intel in the data center market for years. But the world changed. Geopolitics intruded on business. US-China tensions, talk of possible conflict over Taiwan, and export controls on chips all threaten the stability of that TSMC supply line. Apple can't ignore that. NVIDIA can't either. Thus, we witness the spectacle of these companies essentially paying Intel to compete with TSMC. One industry watcher called NVIDIA's $5 billion stake a lifeline to the struggling chipmaker, noting it came just weeks after the White House engineered its own stake in Intel. NVIDIA's investment instantly made it one of Intel's largest shareholders, approximately 4% ownership. Apple's involvement is still in early discussions, but reports indicate Intel has approached Apple for a similar strategic investment and partnership. If Apple joins in, it would be yet another validation of Intel's turnaround bid, and another source of capital and future business for Intel's foundry. Now, let's talk specifics of what these partnerships entail, beyond just writing checks. NVIDIA-Intel collaboration. The deal between NVIDIA and Intel is not only financial, it comes with a technical roadmap. The two companies announced plans to jointly develop new chips for data centers and PCs, marrying NVIDIA's graphics and AI expertise with Intel's CPU and manufacturing know-how. Concretely, Intel will design and manufacture custom x86 CPUs with NVIDIA's NVLink interconnect for data centers, and even produce PC chips, SoCs, that integrate NVIDIA RTX GPU chiplets on an Intel processor. This is a big deal. Imagine future laptops or desktops with Intel inside, but also NVIDIA inside, on the same piece of silicon. For NVIDIA, partnering with Intel here expands the reach of NVIDIA's CUDA and GPU ecosystem into the x86 PC world even more deeply. For Intel, it's an endorsement that its process tech can be good enough for NVIDIA's cutting-edge graphics blocks. It's also a signal to the industry. NVIDIA trusts Intel enough to co-develop products. However, notably, NVIDIA stopped short of saying Intel will fab NVIDIA's own GPU designs for now. Jensen Huang, NVIDIA's CEO, indicated they're evaluating Intel's foundry tech, and the initial plan is for Intel to supply CPUs and advanced packaging for joint products, not to replace TSMC for NVIDIA's standalone GPU manufacturing just yet. In other words, NVIDIA is dipping a toe into Intel's foundry via packaging and hybrid products, rather than jumping head first. This caution makes sense. As the world's largest semiconductor company by market cap, NVIDIA can't risk its core business on Intel's unproven process. But by investing $5 billion and engaging deeply, NVIDIA can help steer Intel's foundry offerings to meet its needs in the future. It's the beginning of a beautiful frenemy relationship. Apple-Intel prospects. Apple's potential alliance with Intel is more shrouded, since it's in early talks and not finalized publicly. But we can infer some possibilities. Apple could negotiate a deal where Intel Foundry Services, IFS, builds certain chips for Apple in a few years, not necessarily the crown jewel iPhone processors right away. Those require the absolute latest process, which Intel might only match in a couple of years, but perhaps secondary chips or future product lines. For instance, Apple might have Intel produce some chips for older iPhone models, or components like modem chips. Remember, Apple bought Intel's 5G modem division in 2019 and has been working on its own modem. Possibly they could tap Intel's fabs to manufacture those if ready. Or Apple might simply invest money for now in exchange for capacity reservations later. What we do know is Apple has been publicly supportive of domestic chip efforts. In 2023, Apple announced it would buy chips from TSMC's new Arizona fab and that it was increasing its US investments to $600 billion over 4 years. Part of that philosophy, as Tim Cook said, is to create a domino effect where more tech production happens on US soil. In that context, helping Intel succeed aligns with Apple's message and political goodwill. If Apple does put money into Intel, it would be seen as a huge vote of confidence, essentially the world's most valuable company betting on Intel's tech roadmap. Even without a check written yet, Apple's engagement in talks shows how high the stakes are. Apple knows that if TSMC ever goes offline, its entire product lineup is in peril. They cannot let that remain the case. So Apple's goal in this alliance is to ensure Intel's foundry rises as a viable second source, giving Apple options and negotiating power. As one analysis noted, for Intel's foundry to survive, it would need to win a large customer such as Nvidia, Apple, Qualcomm, or Broadcom. And here we are. Intel now has Nvidia on board, Apple at the table, and you can bet they are talking to others too. In summary, Nvidia and Apple are the hostages of the current chip landscape, captive to TSMC's near monopoly in high-end fabrication. By becoming stakeholders in Intel's comeback, they are effectively purchasing an insurance policy against supply chain disaster. It's expensive, billions of dollars and deep cooperation, but given the alternative, an unacceptable supply risk, it's a price they're willing to pay. The alliance is not born of friendship. Apple and Nvidia aren't suddenly in love with Intel. It's born of necessity. In a pragmatic, almost ruthless way, they are each asking, how do we make sure our businesses don't collapse if TSMC can't deliver? The answer, help Intel become strong enough to deliver. And if Intel succeeds, there's a bonus for them. Leverage. Even the existence of a second advanced foundry means Apple and Nvidia can negotiate better terms with TSMC. No more blank check price increases or allocation fears. They can play suppliers against each other, the way, say, car makers source from multiple factories. That's a future both companies want to reach as soon as possible. The third big player in this coalition is neither a government nor a chip designer. It's SoftBank, the Japanese investment conglomerate led by Masayoshi Son. SoftBank's role is the gambler of the group, and true to form, Son is making a classic high-stakes bet that he can profit immensely from Intel's rebound. His motive? Pure financial return. SoftBank isn't directly threatened by TSMC or in need of chips for its own products. Instead, it sees Intel as possibly the ultimate turnaround story, an undervalued asset that, with the right catalyst, i.e., this alliance, could soar in value. In short, SoftBank is betting that Intel's darkest days are over and its stock is destined to skyrocket if Pat Gelsinger's, now Lip-Bu Tan's plan succeeds. Let's look at what SoftBank has done. In August 2025, SoftBank Group Corp. Agreed to invest $2 billion in Intel, purchasing common stock at $23 per share. This deal was announced shortly after rumors first surfaced of the US government taking a stake, and about a month before the Nvidia partnership became public. In other words, SoftBank got in early, during the summer when Intel's stock was still depressed. Sure enough, once the government and Nvidia deals were confirmed, Intel's share price jumped. By late September, Intel stock was up over 60% from the start of August. SoftBank likely saw an immediate paper gain on its investment. But Sun's ambitions go beyond a quick trade. He is looking at the long-term upside if Intel really claws its way back to leadership. Masayoshi Son is known for bold moves in tech investing. Sometimes they pay off spectacularly. He was an early investor in Alibaba, and notably, SoftBank was once the largest shareholder of Nvidia itself, buying in 2017 before the AI boom, then selling too early. And sometimes his bets flame out. WeWork, anyone. His strategy often resembles venture capital at massive scale. Find a company or sector he believes is undervalued or pivotal for the future, invest big, and push for aggressive growth. In Intel, Sun likely sees a few attractive things. Intel's low stock price and historic brand. Intel's market value had been beaten down due to years of missteps. For a company with Intel's assets, fab capacity, IP, talent, and strategic importance, SoftBank might consider it undervalued, a bargain if one believes a turnaround is coming. Sun has literally said similar about Nvidia. Even after Nvidia's huge run-up, he commented that Nvidia is undervalued given the future AI potential. If he thinks Nvidia is undervalued, imagine how he feels about Intel, which was hovering around $100 to $120 billion in mid-2025, a fraction of Nvidia's value, despite Intel's crucial role. There's a value investor logic at play. Buy low now, sell high later when fortunes reverse. Catalysts in place. SoftBank wasn't going to invest if Intel was still falling off a cliff with no plan. But by August 2025, there were clear catalysts. The CHIPS Act money was coming in. A new CEO, Lip-Bu Tan, was in charge, and the US government literally was backing the company. That dramatically de-risks the investment from SoftBank's perspective. Then, Nvidia's involvement added another catalyst. Suddenly, Intel is part of the AI rally narrative. Sun likely figured that with all these big players aligned to save Intel, the probability of success, and thus a big stock jump, was much higher. As Intel's own CFO noted, the government stake was an incentive for Intel to stick with the foundry plan and not waver. In other words, Intel now has muscle behind it. Strategic synergy with SoftBank's interests. It's worth noting SoftBank is also the owner of ARM Limited, the company behind the ARM architecture used in most mobile and IoT chips. ARM's IPO happened in 2023, but SoftBank retained a majority stake. If Intel's foundry business grows, Intel will likely be manufacturing a lot of ARM-based chips for clients. Intel's IFS has already announced it will make chips for ARM architecture designs, and they struck a deal with MediaTek earlier for mobile chip production. SoftBank might see an Intel resurgence as beneficial to ARM's ecosystem. More fabs available for ARM-based semiconductor startups or products could mean more royalties for ARM and more business opportunities for SoftBank's portfolio. Masayoshi Son has decades-long relationships in the tech world. Lip-Bu Tan, Intel's CEO, even remarked, "Masa and I have worked closely together for decades when the investment was announced. So this alliance is also about influence. SoftBank gets a seat, figuratively, at the table of an American industrial revival and can align it with its other ventures. So, SoftBank is the gambler, capitalizing on the opportunity created by the patriot, US Gov, and the hostages, Apple/Nvidia. Sun is essentially saying, I see all these powerful players determined to rescue Intel. I want a piece of that action. It's high risk, high reward. If Intel still fails to execute, SoftBank loses money. But SoftBank is no stranger to risk. its vision fund bets show a tolerance for huge swings. In this case, at least Intel is an established firm with government backing, not a speculative startup, which might actually make it one of Sun's more conservative bets, ironically.